the changes in interest rates, but the reality is we are definitely affected, but just not as much as larger firms.
You're listening to Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupe as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures, from multifamily properties, mobile homes to cryptocurrencies. Do not miss this opportunity to escape traditional assets and finally create wealth without Wall Street. Now your host, Jack.
All right, everybody, welcome to another episode of the Alternative Investor Mastermind. Have a great guest today, Chris Jenkins. I've known Chris a number of years, and I'm actually an investor in his fund. And Chris is expert in the search fund industry, which is, I think, a new concept for many of the listeners here. So, Chris, why don't you tell us a little bit about yourself and your background and how you got into this industry?
Sure. Great. Well, thanks, Jack, for having me. It's great to be here and look forward to the conversation. My background is stereotypical, late 80s, went into engineering, started my career in engineering with Ford Motor Company. So shout out to all of our U.S. automaker employees. Had a great experience there, learned a lot, realized that was probably not what I wanted to do the rest of my life. I was a huge automotive nut, still am, used to race cars professionally, and met someone in management consulting and basically kind of transitioned from being an engineer to a business person, working with Fortune 500 companies, primarily to work on supply chain and logistics issues, that essentially processes that we had perfected at Ford, and kind of took those to the high-tech industry. That was kind of the beginning of my management career. I then went to business school where I met my business partner, Alex Wang. Alex and I have known each other now for over 20 years. The short of a very long story is Alex and I started a software company while in business school, grew that business, venture funded, and then sold the business. And after selling the business, during that time frame, we basically learned of the search fund model and knew that we wanted to start something again. We just weren't sure what it was going to be. And at the same time, one of our largest customers of the software company was a company called Genuine Parts Corporation. Napa Auto Parts is one of their divisions. The CEO at the time, Larry Prince, became a wonderful friend and mentor. He was really trying to convince Alex and I to take a more conservative next step, which was just ironic because at the same time, we were learning so much about the search space, which, in hindsight, I think is very aligned with what, the principles that Larry was, really preaching and valuing. And I have to give him a tremendous amount of credit for it because, without his impetus, I'm not sure we'd be here today. So I'll pause there.
Sounds like a great mentor.
Yeah.
So I want to start at the very beginning and explain search, and I'll just share how I became aware of this industry. I did Kellogg's MBA program, and Kellogg, Northwestern University in Chicago, Booth run a conference once a year in Chicago called Entrepreneurship Through Acquisition. So just because they co-sponsor the conference, I received an email about this thing. I was like, entrepreneurship through acquisition, that looks interesting. And I went to the conference in 2019 and didn't realize and just learned there was a new industry. It's really, just really layman's terms, what I describe it as is sort of a micro private equity, buying businesses that are generally too small to sell to Wall Street, but have, great businesses that often the owners are a little older and, maybe are not running the business as efficiently as it could be. And you have these MBAs or just really solid entrepreneurs that can find and acquire these. So I'm probably murdering this, but I think I'd like you to kind of give your take on really what is a search fund, and just give us a little bit of the kind of the industry, how you see the industry.
Sure. So my view on small businesses, whether it's here in the U.S. or in other parts of the world, I just think inherently that small businesses are what make the world tick. And, sure, there are the Amazons and Apples of the world, but, the amount of business that is conducted through small to medium-sized companies is just tremendous. And so I think we all owe a tremendous amount to those small business owners and those founders and those entrepreneurs. And what I love about the search fund space, and we'll get to kind of what a search is, but what I love about what we do is, we help those builders of America and Europe and Asia. We help those builders kind of continue their legacy when they don't have an heir apparent to take over their company and they're looking to retire. Because as you said, the companies that we're talking about are too small for IPOs. And quite frankly, they're too small for large private equity firms that have to deploy billions and billions of dollars. And so these owners of fabulous businesses, often find themselves in a situation where they know that they need to retire, but they don't have a good transition plan. And one of the beautiful things about the space is, when you run a small business with, let's say, 50 to 100 employees, often those folks are like family. And so the seller, in many cases, the seller is more concerned about what's going to happen to their extended family than the financial details of the transaction. And so we find ourselves in an opportunity to help those business owners continue growing the business, expanding on the legacy, continuing the legacy, and continuing to help those employees build great careers.
Yeah, that's great. That's reminds me of a story I heard at this recent ETA conference that I was at. The group of investors were buying a plumbing business, and the owner had an offer from the larger competitor in town, but he just didn't want his legacy to be sort of just folded into this larger company. He wanted his brand to stay and continue and grow. So he took a little bit less money and provided better terms because there's an earnout, some seller financing involved. So he's really sort of in partnership with this new group acquiring it, and because he wanted his employees and his brand his legacy to move forward.
Yep. That's so important to us as private equity investors. We really want to find the right fit. So for us, it's not a financial transaction. We are looking for companies that, fit our model, fit the sectors that we like to invest in. And then most importantly, have proven themselves over a long period of time, because we believe that will be a good indicator of how they will perform in the future. Granted, there are no guarantees, but when we look at sectors with strong tailwinds, if we are looking at a company that has 30 years of operating history that's performed extremely well over a number of different economic cycles, it can give us great comfort that the company will continue to perform well. And we look for businesses where teams are in place. So unlike some of the stereotypical images of private equity where they come in and change the org chart, we don't do that. We look for teams that are in place, and then when there are vacancies in key roles or key chairs, we invest and place people there, so to help the company continue to grow.
That's great. So we've talked about the companies, we talked about the high level concepts. We haven't really talked about the searchers yet. Can you walk us through that process? Because this is a very fragmented market. There's some lists of businesses for sale, but I don't know. I guess a majority of them are really more off-market transactions, and it takes a lot of networking and dialing for dollars and turning over rocks to really find these types of businesses. So just if you can, just explain the searcher side of the business.
Sure. Maybe we start with kind of taking a step back and talk about how it is that we actually go about finding these great businesses. And the searchers are, essentially that key conduit, that key component of that, discovery, if you will. So, in a traditional private equity firm, they will have employees or outside firms that they're working with to target certain sectors and find opportunities and acquire those. If you look at the number of transactions that we typically do in an average portfolio, so on average, we're 25 to 30 companies in a portfolio. You would have to have a huge internal team, which would be extremely, expensive. There would be a huge OpEx to the private equity firm, which is not really good for the investors. If you wanted to just basically have, let's say, 25 or 30 employees that were going to go out and find businesses, come into kind of the search model is a beautiful way to accomplish that, whereby we essentially back a portion of that resource along with other investors, and that individual, that quote searcher, is tapped to go find a business in certain sectors. And with the help of us and other investors that have backed their search, they're able to have the financial means to set up systems and processes to start, Jack, as you mentioned, the outreach process, the proprietary outreach process, whereby they're literally picking up the phone and sending emails and sending letters and meeting people in their local communities, and through that, they basically generate, through thousands of touch points, they generate a relationship with a potential seller, and that relationship, hopefully grows to the searcher basically providing an LOI and a letter of intent to acquire the business. And then through that, from that stage to acquisition, the due diligence process, we are hand in hand with that searcher, helping him or her identify opportunities to really dig into, to explore. If we find issues, to try to uncover those. And then we also work with third-party professional firms, service firms that help with everything from QOE, quality of earnings, to if it's a technology firm, tech due diligence, et cetera. So it's a wonderful process to walk an early career professional, walk them through this whole acquisition piece. It really is a beautiful experience. So I'm sorry if I didn't go deep enough. Happy to, but essentially, Jack, as these searchers are top tier talent, for the most part, recent MBA grads who have decided they don't want to go in investment banking. They don't want to go into consulting. They don't want to go into corporate America. They really want to start something. They don't know exactly what they want to start. And so the whole idea of acquiring a business that they love, and working with a talented investor group, such as, like ourselves, and others, to help them not only find the business, but grow the business and run the business, and having kind of that mentorship, that is kind of the beauty of the model, of what we back.
Yeah, that's great. It's a great explanation. Let me see if I could just add a little clarity with some questions to that. So someone graduates, it's not always someone that graduated business school, but instead of going to work at McKinsey or Goldman, they want to acquire a business. they'll raise money from, firms like yours, or maybe a consortium of firms, and they'll raise enough money to spend 2 years typically to look for a business. Is that accurate?
Yep, exactly. So 2 to 3 years to find that business, and that funding that we and other investors have provided, that actually gets converted and stepped up into the deal that they acquire. So it's unlike having an employee that works for us that would be going out and finding it and that being a pure OpEx, our investment in that search actually gets rolled into the actual investment. So it becomes like a real investment as opposed to an OpEx. That gets stepped up 1.5 times what we've invested in the search.
Yeah, that's great. I mean, it's really the amount of time and effort to find a business is just it's really a bridge that almost, I mean, there's maybe a few people that are independently wealthy and can take the 2 years, but otherwise it takes something that it would be nearly impossible for almost any other candidate to do on their own, take a year or 2 years without working and just to look for a business. So it really is, it seems like an amazing win-win to me to, for the right candidates to back them to look for companies. And it's better that they're, instead of just being an employee, you're making an investment in their business, you get a return when they find the business, it increases your basis. And then you have I assume the right, but not the obligation to fund, all or part of the new business acquisition that you've worked together to underwrite and structure.
Exactly. So, you hit the nail on the head there. So the value add that we provide, comes in multiple different stages. So when the searcher is looking for the business, we're providing all sorts of advice and guidance on not only how to connect with potential sellers, but then how to begin those conversations, how to structure the LOI, letter of intent, how to structure the deal. And then when you get to that stage, then we provide the capital to actually acquire the business. And, and then the next step is mentoring during that, that hold period where we are continuing to grow the business. And I think, as you said, Jack, there are very few people that could do that whole cycle by themselves. And again, when I say few, it's just the opportunity, the total available market, it is just massive. Depending on what metrics and what data sets you use, conservatively, $3 trillion worth of opportunity here in the US. That even the number of searchers that we back is just a rounding error in the total market. And then we've got the tsunami effect that's happening right now with the baby boomers and folks retiring, many of which are these business owners. Many of these business owners, their kids are not interested in taking over their parents' business. They might be successful doctors, lawyers, they might have businesses of their own, they might live in a different part of the country. So it just is a fabulous opportunity for us.
Yeah. And I was listening to Peter Zeihan recently, and this year is the tipping point. 2022 is the year that the average baby boomer is retiring.
Yeah.
And I think we're seeing it across the economy. We're seeing it in, unemployment, even with interest rates. And, frankly, by historical standards, we're supposed to be in a recession, but they keep changing the rules and they don't want to say it's a recession. But even with that, there's still, very low unemployment. And, it seems that's likely to continue. And, it's a real win-win and a real service to these potential sellers to have somebody, young and hungry with a good team behind them to help them take over. And, I always say real estate is a team sport, but investing in general is a team sport.
Absolutely.
And it's great to have experienced partners and access. Even if you're an MBA, usually you have a specialty. Maybe you're a finance guy, but it's rare that you're a finance guy and a marketing guy and and a capital raiser all together. So it seems like you really fill out the team, and that's it's pretty awesome. Let's talk about a couple of examples. The one that got me hooked on this industry was an example I learned about in 2019, where a group of searcher bought the third largest roofing company in Ohio. And it was a commercial roofing company. And, when you think roofs, I think residential. I think it's more of a transactional business, but commercial is much more of a subscription business. It's flat roofs, it's service contracts. So it was a great, steady business, recurring revenue. They acquired it. And one of their key clients also owned properties in Florida. And they used that as a wedge to get into the Florida market. And they've tripled their earnings within 2 or 3 years. And that's something the prior owner just wasn't going to try to do. He didn't have connections in Florida. He was already making good money. He had a comfortable business and wasn't looking to expand. But, a new ownership group was able to come in and capture the opportunity, provide great service to a current client and grow the business together. So that, to me, that was just such a great success story. And I'm sure there's a lot of those. Maybe you could share an example or two of just that come to mind of just really good success stories.
Sure. But before jumping right into kind of some of our, historical companies, I think one of the points that you touched upon is this opportunity for growth. The example that you gave, where a company is, potentially, did you say tripled their EBITDA? So in a situation like that, traditional investors might think, okay, that's like a 3x return, right? But the reality is that, that business, like that probably is generating north of, I'm going to guess, like north of an 8x return, which is just, amazing to generate 8x return in probably sub 4 years. We often find ourselves having to, almost downplay the opportunity because it sounds too good to be true. But the reality is, one of the things that, we talk to institutional investors a lot about is we'll typically buy a company in the 4 to 5 times EBITDA range, and structure it with two turns or 2x of EBITDA of debt. So we're really buying the company 2 to 3 times EBITDA of cash. When you're in a situation like that, literally, if you sell the company, in the future for the same price that you bought it at, so zero growth in EV, literally, it doesn't grow at all. You can make more than 2x on your money, north of a 17% IRR. And if you compare that to the public markets, there's no comparison. And that is under the zero growth scenario. The scenario that you painted, a 300% growth over a period of time, like that's an absolute home run. When we're modeling opportunities and looking at deals, we love to see those opportunities occur, but we don't plan for it. Meaning, we typically look for companies that have been growing double-digit growth, and for us to hit our target numbers, we give a haircut of about 50% to the historic growth numbers, and look to see that we can still achieve our targets. And our targets are, generating a 4 to 5x for our investors, a 35+% IRR. Again, sounds extremely high, and so folks often assume that it's associated with high risk. But we actually feel quite the contrary. We feel that the risk profile is actually quite low.
Yeah, I agree. And to your other point on the multiple, it's a really good point that, growing EBITDA 3 times is really adding sometimes 6 or 9 times of enterprise value. The other thing that I've seen that your firm and other firms could add is potentially the sale. I mean, you mentioned a base case of no growth, but in some cases I've seen that you can get a better multiple on the sale because of the relationships of the search industry. You guys have successfully sold to a private equity fund. When you're looking at a business, you may know that if the business can double in size, it might be an acquisition target for either a private equity fund or even a strategic competitor long term. And you might buy a business at 4 times EBITDA, and if it grows to a size, you might be able to sell it at 7 times EBITDA. I'm just throwing, but yeah, that multiple and that compounding effect of growing EBITDA, but also potentially growing the enterprise value, it can get exponential.
Yeah, absolutely. Absolutely. So, I mean, I think, if you look at the private equity market in general right now, I think average acquisitions are north of 12 times EBITDA, closer to 15 in many cases. So if we can grow a company, to a range that is attractive to larger PE firms, we can definitely see multiple expansion on the exit, considerable multiple expansion, not 4 to 5, but 4 to 7, 4 to 8, very easily. And then again, if you've really bought it on 2x of cash and the debt's been paid off, and on top of that you've had let's just say 10% growth for 7 years, you've doubled the business, that's a huge home run.
Absolutely. I want to get to examples, but just that triggered a question. Just you mentioned private equity funds, and there's a lot going on in the market right now. Over the last 3 or 6 months, with interest rates moving and just all the noise in the economy, have you seen any changes in the industry overall, in the appetite and the opportunities?
Yeah, it's a great question. We get asked that question a lot by institutional investors who are probably more accustomed to very large transactions that have a lot more debt than we typically do, and those increases in interest rates have definitely affected the deal appetite, so to speak, or the agreed upon price. So you'll see a lot of retrades going on, and just deal activity slowed for a little bit. Look, I'd love to say that we are agnostic or untouched by the changes in interest rates, but the reality is we are definitely affected, but just not as much as larger firms, because quite simply the debt load on a company is significantly less, just because we put a lot less debt on the company. So even if interest rates were, let's say companies were paying 4 or 5%, and let's say now, it depends on the business, but let's just use even on the high side, like 8 or 9%, it doesn't in any way materially affect the cash flow from the business. So it really doesn't affect it. What we haven't seen, Jack, though, is really interesting, for me at least, is we haven't seen what I expected, which was that sellers would be dropping their expectation in price. So I was actually looking at, I'd been thinking that this next 2 years could be a great opportunity for buying, for 2 reasons. The point that you brought up earlier, which is there's this huge, baby boomer population that's retiring. So that's one. And then 2, the rising interest rates, I thought we could get, better valuation. So much, very similar to real estate. Like, you expect real estate prices to come down a bit with the rising interest rates, which, ironically or coincidentally, I have not personally seen out here in California, where I live, or some of the markets that I actually do invest in real estate. Those markets all seem to be super strong, even though the interest rates have gone up quite a bit. And I guess maybe it's because the demand for housing is still just so strong, and housing starts have been slow. I don't know exactly, but it is fascinating for me to watch.
Yeah. It's I never expected a 2008 crash. I've got a lot of recent content where I keep quoting Howard Marks from Oak Tree saying history may not repeat itself, but it does rhyme. And yeah, I mean, you guys aren't targeting distressed businesses necessarily. It's really just it's successful businesses that are still growing, but just don't have an exit plan. So I guess my thoughts are the owners are, they're not desperate or overly motivated sellers, at least not always financially. Maybe with the markets tanking, maybe it changes the psyche a little bit of somebody who's, their nest egg isn't what it was, and they start thinking a little more seriously about, taking some chips off the table. But yeah, I think it's not I guess it makes some sense to me that it's people aren't flooding to drop their prices significantly and just make a quick decision to sell.
Yeah,
that's probably a good thing for the economy. It shows some underlying strength.
Absolutely. I mean, that's why when folks ask me, like, what do we see? I mean, our portfolio companies have just been, on fire, just growing and performing well. And folks talked, the last few years while we were going through the challenges with COVID and all the supply chain issues and business issues and people issues. We had during that period, we had only 2 companies that were slightly off. We had, no write-offs, none that were struggling from a cash flow perspective or covenant perspective. The vast majority of our companies were growing high double digits. So we attribute that to kind of not only our focus on specific sectors, but again, just the strength of the small to medium-sized businesses, the backbone of what I call the backbone of our economy, our world economy, quite frankly. And I think it's very strong. So Jack, to your point, like, we don't do distressed. We look for the small version of Google, the small version of Apple, the small version of Genuine Parts Corporation. Actually, that's it's probably even a more applicable, where they're just kind of keeping the lights on for the world. And that's what we love, and that's what we invest in, and that's what we help grow, because we believe at the end of the day, those are the businesses that have been around for 30 years, and those businesses will be essential to our local and, world economies for years to come.
Yeah. And it's in some ways, in many ways, you're a small version of Warren Buffett, just buying high quality businesses, just a couple less zeros in the valuations.
Yeah. Yeah. Well, I mean, I guess there are some similarities, especially too, even if you look at how he started, many years ago, or the early days of Berkshire. So
yeah, and we did a case study on Warren Buffett in business school, and in the 60s and 70s he had higher returns on the public markets, but the last 20 years Berkshire has higher returns in their private equity transactions than their public market transactions. And that on the market that we're talking about in a search fund, I mean, that's going to be amplified because these are smaller businesses that don't have access to IPO, as you mentioned, or not going to be at a level to be selling at those very high multiples to the large private equity funds.
Yep.
We got a little bit sidetracked, but yeah, I think it'd be good to cover some of the types of industries and types of just high level, the types of businesses that you've invested in, and and some success stories as well, because I can imagine some of the listeners are like, oh, who's going to sell their business? Like, what's a realistic example? So maybe you could just highlight some of the holdings and some of the deals.
Sure. So the sectors that we like, again, we like sectors that have strong tailwinds, and then sectors that we have a lot of expertise in or experience in. So technology / SaaS supporting businesses. So, not the underlying Oracles or SAPs of the world, but technologies that help those companies directly, or help customers that are using those platforms, for example. And this is just an example. integrate with other systems, or run their, their day-to-day operations. So an example there, a great business, based in, I think it's now technically virtual, but a lot of the core of the business was started up in Silicon Valley, a company called EverOps, run by Stephen Koza. That's a great managed service provider, and they basically help develop technology and code for a number of very large, medium and large companies, as well as high-tech startups that need to ramp up, specific platforms quickly. Stephen and his team, are doing a wonderful job there. So that's one sector that we like, and that's one example. Financial services, specialty finance, that's a space that we love as well. We've got a litigation finance company that Lex shares, which we love. I think we've also got ILS in there, and Wavecrest, which those businesses. Wavecrest is a really interesting one. They really support primarily the government contracting space, and they procure invoices from essentially the U.S. government. So the U.S. government becomes the payer, and they buy those from small consulting firms that need the cash today and don't want to wait 30 or 45 days. So they do basically factoring. To then another company, Prove Partners, which is medical lien financing, so helping doctors get cash quicker. We love that space. Then traditional, what used to be called B2B, we now talk about industrial services. That would be a great example there. Would be a business that I'm on the board of, Line Drive. Line Drive is essentially an outsourced sales organization, and their customers are companies like Bosch, 3M, DuPont, Just Right, just to name a few. And they sell, to put things in perspective. Line Drive, and again, this is a company probably nobody's, the vast majority of us had never heard of Line Drive. At least I hadn't. Wonderful business, wonderful founders, wonderful sellers. Several of the sellers have stayed on and are continuing to run the company with Michael Abdella, who was our searcher. Just a great team. They're selling like over, well, maybe I shouldn't say a very, since it's going public, just a very large number of dollars through the world economy runs through Line Drive. And so they are an essential business to all of these Fortune 500, Fortune 1000 companies. And they've got, tremendous diversity across sectors.
I think you mentioned they stayed on. I thought the Lex shares one I thought was an interesting story. If I have this correct, where that was another situation where I think one of the partners had the legal side of it, and I don't know if your searcher was more the finance side, and it was really just like a perfect marriage of a business partnership where an additional skill set came in, and 1 + 1 = 5 just by bringing the team together.
Yep, that's right. And then the final sector that we really like is healthcare. So Cicero Therapies is a great team to call out and talk about. Again, kind of near and dear to my heart from a personal perspective, and I think just doing great for our local communities. They are really building out a phenomenal practice around pediatric specialty therapies, speech therapy, occupational therapy, physical therapy, primarily. And that's a much, that is a much needed practice unfortunately, in much of the United States and much of the world. So, Grant and Taylor doing just a great job there. So
that's awesome. That's awesome. Back to the searcher side of it, it's, a lot of them tend to come from MBA program, but that's not a requirement, is it? You don't have to have a Harvard MBA to become a searcher?
Well, I guess there's two ways to answer that question. So obviously, or I shouldn't say obviously, one doesn't need to have an MBA to go out and find, folks to back them and acquire a business. We really try to stick to our knitting, and we really do look for specific types of backgrounds. And the MBA is one of those check boxes, but it's not to say that if you don't have the MBA, we wouldn't back you. And there are examples in our portfolio of folks that are, extremely talented, have worked in industry for a long time, know a sector extremely well, come to us with a very strong thesis, and we back them.
Gotcha. Are there any other intangibles you've noticed of the searchers, of like, what's the top one or two things that that sets a searcher that you work with apart, as opposed to one that you pass or choose not to work with?
There are probably a few. Whether they really matter at the end of the day is probably debatable. But I think we, my partners and I, should give a shout out to Alex and Adam and Andrew. I think we look for folks that we think are obviously very smart, but also very humble and very open to feedback and learning. The journey for us with this person is going to be many years. So we're going to spend 10 years plus with this person. We really want to find someone that we want to work with, right? And hang out with and be friends with. So if the person is an egomaniac, probably not a good fit for us. And it's not to say that they won't be successful, but, when you're acquiring a small business with real people, you have to have not just IQ, but you have to have EQ. And you can't wear your MBA on your shirt collar or your chest, and you can't brag about the school you went to, because at the end of the day, in business, whether it's small or big, most people don't care about that. And we certainly really don't. So we look for folks that also have a history of success and growth.
Yeah, no, that's great stuff. And I find myself all the time, I want to do business with people I like. You don't need to be best friends, but you said 10 years. Sometimes you spend more time, with business partners, you spend more time than your spouse in some cases, because of the portfolio companies, maybe not for each company, but still a significant amount of time. And I think it's even more impactful when there's challenges. Someone that has the right attitude when things get a little tough. You need to have, someone who has the right attitude and is humble and is willing to, take feedback and just figure out how to navigate things, especially if and when there are challenges. So it makes a lot of sense to me.
Absolutely. Yep. Agree 100%.
Great. Well, I think we've covered, is there anything we haven't covered here I think we've covered a lot. You have any final thoughts?
I just think it's a great time to be, to be building and investing. So, we have a very long horizon, and, I think very much like the Buffett piece, we don't try to make short-term trades. We're builders and believers in long-term appreciation and, compounding. And again, obviously we very much like real estate, the way we structure things, there are all sorts of tax advantages as well. So we think it's just a great platform for at least the next 30 years.
Absolutely. And look, I put my money where my mouth is. I'm personally invested with you guys in your prior fund. For SEC reasons, we won't go into too much detail, but for you guys have your website, rivieracapital.com. Are you also on other social media platforms? where people can follow along?
Not really. I mean, we have to be really careful. Investment firms have to, to be careful, and we really, we are geared more towards QPs, qualified purchasers, family offices, and institutional investors. Minimum investments are like $1 million plus. So.
Gotcha. And that's one of the things, we'll continue talking about over time, because one of the things JCAM tries to do for our investors is, work together to provide access to some of these vehicles through our network of funds. So maybe there'll be some opportunities in the future to give some of our people who, maybe only putting in 50 or 100,000 a way to get access to, to a fund that typically is more for family offices and institutional.
That'd be great. That'd be great.
Awesome. Well, Chris, thank you so much for your time. It's very informative, and I think the audience is really going to like it. So real pleasure to chat, and let's do it again sometime.
Sounds great. Thanks for having me, Jack.
All right. Thanks, everybody.
Take care.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at AlternativeInvestorMastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.